We are going to talk about profit margins. I want you to hang in because it's going to be in plain entrepreneur speak. It's such an important number to really understand in your business. And quite honestly, most entrepreneurs have been taught badly by bookkeepers what the profit margin is. So, because the way I want you to think about your business is you sell these products or these services up here, and you have a few of them. Let's say you have 1, 2, and 3. And each one of them has this contribution margin. We are going to talk about profit margins. I want you to hang in because it's going to be in plain entrepreneur speak. It's such an important number to really understand in your business. And quite honestly, most entrepreneurs have been taught badly by bookkeepers what the profit margin is. So let's do it the right way and see why it's so critical to you as a business owner, being able to optimize your business and your own personal wealth out of your business. Let's dive in. Come on. All right. We are going to talk profit margin. And what is it? Okay. Very simply, it's the money you make from selling stuff, right? Minus the money you spend to sell it / provide it. That's simple. Now, what that equals is what we're going to call your profit margin. But here's where people get confused, and they'll often say, oh, that's my business profit margin, and it's really not. This is your gross profit margin, is what it's sometimes called. I like to call it, and we're going to use this term, contribution margin. And there's a reason we're using that term. Because the way I want you to think about your business is you sell these products or these services up here, and you have a few of them. Let's say you have 1, 2, and 3. And each one of them has this contribution margin, and it's a dollar amount. And then you have this stuff down here that is your fixed expenses. Some people call it S, G, and A, standing for selling, general, and administrative. Some people call it overhead. We can use that as well. Lots of names for these, but this is essentially the cost for keeping the lights on in the business. So we'll just put a light bulb here. It doesn't look like a light bulb. That looks terrible. We won't put there at all. That is bad, PM. Imagine a light bulb, if you will. This is what you do to keep the lights on. So I'm going to drop that in here. You keep the lights on. Okay? So the way to think about these costs up here, when we talk, hey, this is not a glitch. Stop. Don't scroll past. At Priorities Group, we offer everything from group finance mentorship programs designed especially in entrepreneur speak for entrepreneurs by an entrepreneur, all the way up to one-on-one business strategy and finance coaching, and also full service done-for-you bookkeeping and fractional CFO services. We focus on one thing across all of those offerings, using our expertise to help you optimize your business and reach your personal financial goals. So whether it's a mindset block or a cash flow block or any kind of block, we have the solution for you if you're an entrepreneur who's ready to put your financial house in order. Click below to take a quiz that's going to help us find out exactly what will help you most. Talk about what we spend to sell it, right? Remember I said contribution margin is your revenue or what you get from your customer when you sell stuff. So it's your money coming in minus the dollars that you spend to sell it, which is often called your cost of goods sold. I like to call this direct cost because it's directly related to this revenue. So the way that I talk about what these costs are is if there's no sale, there's zero cost. So for example, if you had no customers, nothing that you're calling COGS would have to be spent. If you had 10 customers, 10 customers worth of COGS needs to be spent. COGS is short for cost of goods sold. Let's call them direct costs though. So your revenue minus your direct costs equals your contribution margin for each product. So you're going to have something in here, like just say we have a $100 price to our customer, a $50 price to our customer, and a $200 price to our customer. And let's say that the direct costs to provide that revenue, and let's just put over here the types of things that might include. That might include, if you're a coaching business, it would be the coach cost. It might be a gift that you give every client. If you are a product business, it's going to be the cost of the product, the cost of any supply that you need for packaging. It could include shipping. It's all of the things and only the things directly related to being able to sell that thing. Okay? Nothing that is fixed. And I'll give you some examples of the fixed in a minute as well. But let's say that for those direct costs, so this is your revenue, this is your direct costs for these. Let's say for this one, it is $30. Let's say that for this one, your direct costs are really low. It's only $5. Let's say for this one, your direct costs are actually pretty high. They're $120. So in this case, I'm going to put you the contribution margin for each one here in a different color. And let's pick our green color here. So this one, your contribution margin is $70 every time you sell one. This one, your contribution is $45 every time you sell one. This one, your contribution margin is $80 every time you sell one. So something important to know is you can now say, oh, if I sell 100 of these and 200 of these and 10 of these, I know that my contribution margin for that month, say in a month, this is going to be your quantities that you sell. I know I can go, oh, I know what that's going to give me in contribution margin. Your contribution margin is going to be 100 units at $70, so that's going to be $7,000. 200 units at $45, that's going to be $9,000. And 10 units at $80, which is going to be $800. So I'm going to have total contribution margin across my entire business of $16,800. That's going to contribute to paying the bills, what we'll call the bills, the fixed bills, SG&A, overhead, keeping the lights on. And anything left over after it contributes to those is my net income. That's simple, right? But here's why it's such a critical number. I hope you can see this now. You can now look at it and decide where you want to put your money, where you want to put your time, where you want to spend your advertising dollars. Because this tells you very simply, if I sell more of these, I get $80 for each additional unit that I sell. If I sell more of these, hey, this is a lot cheaper product that's a lot easier to sell, and I only get $10 less than the $80. So, what would happen if I totally change things? What would happen if I said, and now you can see this, and the only reason you can see this is because you understand your contribution margin. What would happen if instead of selling 100 of these, I sold 200 of these and only sold 100 of these? Well, we can do the math on the next page, but essentially we will have here 200 times the $70, 100 times the $45, and we'll have 10 times the $80. And now here we have $14,000. Here we have $4,500. And here we have $800. So now our amount is $19,300 in contribution margin versus $16,800. And what does that mean? Why is that so important? Follow me here. If that's the case, you have plus $3,000, $2,500, let's call it, plus $2,500 free and clear to you to either spend more on fixed expenses or to increase your net income, right? And what's the cool thing about net income? Net income, you can do one of two things with. You can give it to you because it's hard-earned, or you can invest it in growth. So Remember your profit margin. Let's go back and do a quick review. It's what the profit margin is. I call the contribution margin. It's the money you make selling stuff minus the money you spend to sell it, just the direct costs, direct only. Somewhere I have that word, but I'll write it again, direct only. And remember, no sale, no cost, right? It means if you had no sales for the month, you'd have zero cost. What's left over is your contribution margin, which contributes to covering all those fixed costs. Keep the lights on, cost, travel, salaries, software that you have to have in your business, video production, whatever those might be, all of which are contributing to your business, mind you, but they're going to still happen whether you have a client or not. That's what the fixed costs are. And then what's left over goes to net income, which is the most important number because that comes back to you or lets you grow your business. Have a great day, and remember, master your mindset, master your money. I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.